Good morning, this is Larry Edelson for my Uncommon Wisdom video for Thursday, July 1st. Well, this should normally be a light pre-July 4th holiday trading week, but we've certainly seen quite a bit of action so far this week, with gold gyrating pretty wildly, oil gyrating pretty wildly, stocks hitting the skids, the dollar swinging on a roller coaster. So it's pretty exciting stuff here, and I suspect we'll keep this exciting trading up for the next couple of days going into the weekend, and then it should be even more interesting next week after the July 4th holiday. Let's go right to the gold market. I have in front of me the standard chart that I've been showing you all along in gold. As you can see, gold popped up higher Monday, came back down, is still holding support on this uptrend line here at about 1225, and there's considerably more support at 1220 and 1202. It is possible we could see a dip down to 1202 in gold. However, I'm inclined to think with stocks falling apart and semi-panic starting to hit many of the financial markets that we could see gold kick off to the next target, 1300, 1340, even 1350 over the next few weeks. So short term, I remain bullish on gold. I remain bullish on gold shares. Interestingly, last week as the Dow started to slide, mining shares, gold mining shares rose while the Dow declined and the S&P 500 declined. We're going to see more of that action going forward on a bigger picture point of view. From day to day, there will be gyrations in all markets, but I do believe that we're going to see more capital go into gold and gold mining shares as stocks fall on the next down leg in their market here. Let's go now specifically to the Dow. That's where there's quite a bit of action here. Let me pull this chart up here for you. Last week I told you that actually, a couple of weeks ago, I told you to expect a rally back up to 10.5 from this low down at 96.78. We indeed did get that. Then I told you that the market was likely to go back down and retest this support level, and indeed that's precisely what's happened this week. We are now back at the 98.70, 9700 level, probing support there. The market is looking very bearish, as I suspected. As soon as we get a close below the prior low at about 96.78, the Dow could go into a virtual free fall down to 9,000, then 8,700. So I have been warning about this repeatedly for the past 4 weeks. You should not be in any stocks except gold mining shares and select other natural resource stocks that are tangible assets that will become a flight to safety as we continue to go through this monetary crisis, and as the stock market starts to give back many of its gains that it acquired since the March 2009 low. Bear in mind, I am not super bearish on the market. I do expect a probe of 8,700 on the Dow, but after that we will likely go above 12,000 in the Dow. I am not predicting a meltdown or new lows in the stock market at all. Quite the contrary. I believe at some point, as we've seen in many third world countries and emerging economies, when the currency market or the underlying currency comes into question and we have a sovereign debt crisis, a monetary crisis, stocks can become a contra-dollar asset. That's what happened between 1932 and 1937 in the Great Depression. As Roosevelt devalued the dollar by increasing the value of gold, stocks took off. Out of the 1932 low, the Dow rose some 250% before going into its next decline in 37, which in today's equivalent would be the tantamount to what they're calling a second recession. I don't believe we're in a recession. I believe the U.S. economy is in a depression. So is Europe. And we need to make a distinction between financial assets, currencies, and the underlying economy. You do not have to have growth in the underlying economy to see a stock market rally of major proportions. So keep that in mind. You won't hear many people saying that, and it contradicts logical reasoning. However, there's nothing logical about the markets, and you cannot think linearly today. You must think dynamically. Let's take a look at the dollar index. Here I cleared some of the lines off so that you could see this a little bit better today. Let me pull it down. We're going to see the dollar consolidate between 85.5 and 88. This purple line up here and this light blue line here, we're in a trading range in the dollar. Keep in mind that the dollar has only recently strengthened against the euro. Meanwhile, the dollar's fallen against many other currencies, especially Asian currencies. It's even fallen against the Thai baht, an emerging economy that just had a civil war a few weeks ago. So keep in mind that you got to look at the world in with different glasses and really take a look at what's happening here. Yes, the euro is in trouble. Yes, the dollar is in trouble. But China's currency, as we've seen, is being revalued higher. The Thai baht is strengthening. The Singaporean dollar is strengthening. The Malaysian ringgit is strengthening. The Indonesian rupiah is strengthening. So we're seeing Asian currencies gain in value against the dollar. We're seeing the euro lose in value against the dollar. So you're seeing a teetering and tottering here of the monetary system. Longer term, you know my views. The dollar will lose its status as the world's reserve currency. And we'll probably end up with the G20 having to rewrite the rules of the game and come up with a new monetary system. Next, let's take a look at oil. Oil gave the appearances that it was breaking out. I told you to expect a pullback. That's indeed what we got yesterday. In the last couple of days, oil's back down from 79 and change, almost 80 to 76. I suspect we'll trade lower to 74, 73, and then rally again. Longer term, the bull market in oil remains intact. Within the next couple of years, we will see new record highs in the price of oil, largely as the dollar, as a result of the dollar being devalued. And also, make no mistake, demand is not that diminished in oil, even with the U.S. and European economies sinking. You still have considerable demand for crude oil, even with those economies sinking, but especially because of the rise of Asia. So keep your eyes on oil. I do have some oil positions on. I'll be looking to add more on dips for my trading subscribers and my Real Wealth Report subscribers. Until next week, please stay tuned, but also please have a very good holiday weekend. I'll talk to you next